The US Securities and Exchange Commission, or SEC, plays a crucial role in protecting investors and maintaining fair markets. Recently, they have turned their attention to the world of cryptocurrencies. In a landmark lawsuit against Consensys, the SEC claimed that some cryptos are not just digital currencies. They argue that these assets should be regulated as securities, just like stocks and bonds. The SEC's lawsuit has sent shockwaves through the crypto community. It has raised questions about which cryptos might be classified as securities. The outcome of this case could have significant implications for the future of the entire crypto industry. Investors are watching closely to see how this will impact their digital assets. This essay will delve into the SEC's rationale, will explore why Terra Luna Classic, MATIC and 3 other cryptos are being classified as securities, will use clear, accessible language to help you navigate this complex issue. To understand the SEC's position, we need to grasp the concept of the Howey test. This test originates from a 1946 Supreme Court case. It helps determine whether a transaction qualifies as an investment contract and is therefore subject to securities laws. The Howey test has 4 key components. First, there must be an investment of money. Second, this investment must be in a common enterprise. Third, there's an expectation of profits. Finally, these profits must be derived from the efforts of others. The SEC argues that certain cryptos, including Terra Luna Classic, MATIC, SAND, CHZ and MANA, meet the Howey test criteria. They claim these cryptos were marketed and sold with the promise of future profits. These profits, they contend, were tied to the efforts of the companies or groups behind these projects. Let's look at specific examples. Terra Luna Classic, the native token of the Terra platform, was promoted as being integral to the growth of the Terra ecosystem. Investors were led to believe that as the ecosystem thrived, the value of their Luna tokens would increase. Similarly, MATIC, the token of the Polygon network, was marketed as essential to the network's functionality. Investors were told that MATIC would play a vital role in Polygon's scaling solutions. This, in turn, was expected to drive demand and increase MATIC's value. The SEC argues that these marketing efforts created an expectation of profits. These profits, they assert, would be generated primarily by the efforts of the teams behind Terra Luna Classic and MATIC, rather than by the investors themselves. Section 4. The SEC's actions, protection or overreach. The SEC's stance has sparked a debate about its role in the crypto industry. Proponents of regulation argue that the SEC's actions are necessary to protect investors. They believe that the crypto market is rife with scams and risky schemes. On the other hand, critics argue that the SEC is overreaching. They claim that the agency's broad interpretation of securities laws is stifling innovation in the crypto space. They worry that excessive regulation will hinder the growth of this emerging industry. The outcome of the SEC's lawsuit against Consensys could have far-reaching consequences. If the court sides with the SEC, it could set a precedent for how other cryptos are regulated. This could lead to increased scrutiny of crypto projects and exchanges. Section 5. Navigating the future of crypto regulation. The SEC's actions highlight the need for greater clarity and certainty in crypto regulation. Industry participants are calling for clear guidelines on how to operate within the bounds of the law. They believe that a well-defined regulatory framework will foster innovation and attract more institutional investment. In the meantime, it's essential for crypto investors to stay informed about the evolving regulatory landscape. Conduct thorough research before investing in any crypto project, understand the risks involved, and consider seeking advice from a qualified financial advisor. The world of crypto is still in its early stages. As it matures, we can expect to see more regulatory clarity. The outcome of the SEC's lawsuit against Consensys will be a significant step in shaping the future of this exciting and dynamic industry.